Hey everybody, happy Monday. Hope you're having a great start of the week. Hope you're doing good. Hope the family is good. Hope all is good. So just want to bring you some info on kind of what I was talking about a week or so ago when it comes to Credit Suisse, right? So their filings, their financial report came out recently, October 27th. And it's worse than the last one. Not surprised. So here you can kind of see the numbers. Credit Suisse third quarter 2022 numbers. You can kind of see here net income loss attributed to shareholders negative. So they took a 4 billion hit in third quarter 2022. So that's a pretty big hit. I mean, and this is a massive institution. Credit Suisse has been around since 1846. So you can kind of imagine what kind of influence they have on the global market. And I'll kind of go into a little bit about that in a bit. So yeah, they seem to be getting they seem to be getting worse and worse in terms of their numbers. Negative a $4 billion loss here basically. And yeah, it just could like 4 billion lost third quarter 2022. um Assets under management are decreasing, meaning investors are taking their money out of the bank or out of the investment division of the bank, the wealth management division. The one of the good things that I found in Credit Suisse finances is that about 50% of their um, investment assets are placed in tier one areas, which is basically insurance companies. That means that's 50% is in a reasonable, safe place. However, the fact that they've been getting hit by so many losses and things have not been going well for them is not a good thing. Here, you can kind of see. Let me stop my share and swap it over. So here you can kind of see the Archegos loss, which was in 2021, $4 billion loss, $4,312,000,000 loss. And that was the start of the big problem for Credit Suisse, basically. And it has been downhill since then, and that was in March 2021. So yeah, I mean, they're slowly heading for bankruptcy is what it seems like. And they recently announced restructuring, which is just one step before potentially announcing bankruptcy. They're trying to save the bank before maybe going that way, but it seems like based off of the revenue and income and all this good stuff, it's just declining quarter over quarter, year over year. And it's been downhill since the Archegos collapse last year, the hedge fund collapse. So income loss $666 million, little less of a loss than last quarter, a second quarter, which was 1 billion. But yeah, net revenue. So what I was kind of saying is just little by little decreasing year after year, quarter after quarter. So this seems like Credit Suisse is like literally dying. So third quarter net revenue was a billion. Second quarter, 1,136,000,000. Second quarter of this year was 1,150,000,000. And then let's go back a year or so ago. where it was 9 billion in revenue. So you can kind of see it's just slowly, steadily declining. And then these are the quarters. You got the years over here. But yeah, they've just been, I mean, it just seems like this company's in for big trouble. And I'm curious what that big trouble might potentially lead to outside of Credit Suisse. Let me swap over here because, again, it's a massive, massive investment bank, a very prestigious investment bank that has ties all over the world. And it has not gotten to the point where they're defaulted yet because they're asking, they're borrowing money from other banks and whatnot to kind of stay afloat. And that's where the restructuring comes in. I was looking in through this, and Credit Suisse is among one of the largest issuers of commercial mortgage-backed securities. I don't know where the market share currently stands, but according to statistics, in 2019, Credit Suisse owned 5.3% market share of the global commercial mortgage-backed securities. So that gives you an idea that potential hit to Credit Suisse is going to have a hit to the commercial real estate market because they supply a lot of the loans for commercial real estate. And if you have such a large investment bank that has a large market share in that market, it's going to slow down demand for the commercial real estate market. And I don't know what kind of influence it might have on prices. So yeah, Credit Suisse in 2021 took an $18 billion loss, and that was approximately net income loss of 1.65 billion. Their asset managements have been decreasing because I guess the investors that were invested in there have gotten burned really bad recently, and they seem to be just taking their money. And there's just a lot of bad rep going on with this company right now. So yeah, you can kind of see globestreet.com, send questions about what impact the changes would have on the commercial real estate lending, existing portfolio of loans, and activity in commercial mortgage-backed securities, particularly but not restricted to the US and North America. So Credit Suisse has influence in the commercial real estate market in the US, along with other important markets, which I'll go into in a little bit. So here, this is linked in with the restructuring, which again is just basically one step before bankruptcy. Credit Suisse cuts 9,000 jobs, and they're seeking billions in investment because if they don't get these investments, they're more likely going to default on their debts and then technically be bankrupt. So it seems that they're trying to raise as much money as they can to pay whatever their liabilities are. So Credit Suisse hopes that shareholders will approve potential raise of capital, and one of the individuals or entities that are willing to lend approximately 4 billion francs to Credit Suisse is the Saudi National Bank. And that would give them almost 10% sharehold or 10% ownership in Credit Suisse. So it just kind of shows you how desperate they are in need of money to potentially pay off whatever it is they owe. And the market right now is not in Credit Suisse's favor in terms of rates are up. So now that means that Credit Suisse has to borrow money from Saudi National Bank at a higher rate. And typically banks lend to each other on the Fed rate. And, you know, continuous loans like these put upward pressure on the Fed rate, increasing it. So, yeah, they have they're announcing they're going to cut jobs. They announced the restructuring plan. I found this pretty interesting because I know, Credit Suisse being a Switzerland bank, they have less regulations. And some pretty sketchy stuff when you dig into it that you run into. So, okay, Credit Suisse also confirmed it would continue carving up its investment bank as it tried to raise more cash. This will involve selling a part of its securitized business, which buys and sells investment products that are backed by pools of assets like mortgages, credit card debts, car loans to American investment groups, PIMCO and Apollo. So you can already tell they have connections or influences to companies here in the US and real estate, credit cards, and I found even the bond market, which is kind of scary. So Credit Suisse plans to spin off a part of its investment bank, which will run under the branding Credit Suisse First Boston. I believe this is the Boston office that Credit Suisse has, and this is sketchy as hell because when companies that are highly indebted and in trouble start a spinoff and they create a spinoff, basically the Credit Suisse being the parent removes a part of itself, creates another business. In this case, the spinoff Credit Suisse First Boston, and they try to remove all their debt and all the negativity from their main business onto the child, which in this case would be First Boston. So that's sketchy stuff because banks do that when they are in big trouble, and I would not touch whatever spinoff they release because that is probably a ticking time bomb. I find that really interesting because this happened in 2008 where all these highly indebted banks were chucking off spinoffs, and that spinoff came with all the baggage, their debts, their liabilities, and they were basically ticking time bombs. So I find it really interesting that they're spinning off, and specifically spinning off part of the investment bank, which is what's been hit the hardest with all the craziness of last year and all the hedge funds that went under and all that. So it's crazy because Credit Suisse has been around for 166 years approximately. I don't know if they're considered one of the too big to fail companies. If that's the case, it's scary because when one of those big boys go out, usually it causes a crisis. But they've been around for a long time. They have influence in a lot of global markets. And I would say bankruptcy and Credit Suisse can potentially lead to some sort of crisis at the very minimum in Switzerland. But again, I have no idea. So the overhaul for the restructuring follows a series of scandals in recent years. Credit Suisse was embroiled in the collapse of the lender Greensill Capital and the U.S. hedge fund Archegos Capital in 2021, which had the collapse of Archegos, Goldman Sachs, Deutsche Bank, and a bunch of other major banks were kind of involved in that situation. That year, it also admitted defrauding investors as part of the Mozambique tuna bonds loan scandal, resulting in a fine of more than 350 million. Sketchy stuff. This bank is really sketchy. This year, Swiss prosecutors found the bank guilty of helping to launder money on behalf of the Bulgarian mafia. So yeah, I mean, everyone kind of knows Switzerland is not as regulated, and a lot of sketchy stuff happens in their banking systems. And also some more negative news here on them. So yeah, that's kind of like interesting stuff I'm running into, and this is kind of like how Credit Suisse is involved in the U.S. Well, not involved, but they are in a way influence the American markets. They have offices here in Boston, Chicago, Houston, Los Angeles, New York, San Francisco, and they are a member of all the major stock exchanges. Credit Suisse underwrites transactions, so they underwrite IPOs, initial public offerings, and all that kind of stuff. We are a proven leader in debt underwriting and in corporate lending. So they lend a lot of money to corporations and whatnot, demonstrate through its role in many of the most recognizable US bond issues. This is the scary part that I want to kind of like dig more deep into, because what is Credit Suisse involvement in the US bond market? Or yeah, because when the bond market collapses, so does everything else. One thing you always have to look out for is the bond market. When the bond market sells off and just crashes, shortly thereon after, everything else comes down like a domino. They help the following leading companies tap to the debt market. Fannie Mae, which is the monstrous government-sponsored entity that provides loans for the housing market in terms of commercial loans. Canaco, Pan Am, SAT, Ford Motor Credit, and GE Capital, to name a few. So they're involved in the car market, housing market, bond market, and I don't know what other markets. But yeah, leading to that being said, restructuring is a fluffy word for potential. They're potentially heading for bankruptcy, and they're requesting loans from other banks to pay whatever it is they owe. So it seems like the odds of Credit Suisse going bankrupt in the near future are pretty high. So I'm not quite sure why is that important, because it seems like Credit Suisse, and it would make sense them being around since 1846, have a lot of influence on the US market. So let me just swap over here. Another interesting thing I've been seeing, and again, I just used the charts for reference, but you got, this is volatility, which is usually, it's inverse to the S&P 500. S&P 500 goes up, volatility goes down. Volatility goes up, S&P goes down. Typically, if S&P 500 is going down, the freaking global economy, all markets are going down. So volatility is in an uptrend. This is 2000 January 2007 here. Volatility was in an uptrend, and then suddenly it exploded. And around this time, I think, was when the Lehman Brothers Bank, which was an investment bank, and they were involved in the crazy housing market collapse, announced they could not pay their liabilities. They went bankrupt. Boom. Volatility went, I don't know, I don't think it ever has been that high. It just exploded. You got over here the COVID crash. This was basically came out of nowhere, though, because, you know, COVID came out of nowhere. But you can see here that volatility was in an uptrend leading up to the financial crisis. Volatility, as it stands now, is in an uptrend as well. I don't know. This doesn't mean anything. I don't want to say this means anything, but this doesn't predict anything. It's just like saying, hey, as of now, from what I can see from looking at this, volatility is in an uptrend. And I'm just curious to see if it's leading up to some potential highly explosive spike, which can be caused by panic in the market. So I don't know where this is going, but all I know and I can see, volatility is in an uptrend. And you do not want this thing going up if you're invested in the market. So another interesting thing to kind of keep an eye on. And yeah, since I've been talking about Credit Suisse, which is basically a massive investment bank. I was looking into this, and because this is the tricky situation with bank runs, right? So even a bank that is solvent under normal conditions can rarely survive a sustained run, meaning bank run. Its cash reserves are quickly exhausted, and its remaining assets, including its loans, could be quickly cannot be sold quickly except at depressed prices. Thus, a run that begins because depositors and other providers of funds fear a bank may fail risks becoming a self-fulfilling prophecy. So basically saying, even if a bank is in strong financial health, a panic that would cause or influence bank runs, meaning a bunch of savings account holders running into the banks or ATMs or withdrawing their monies from the bank, will cause that bank to go bankrupt. And something to keep an eye out for, because I don't think that's happened with Credit Suisse yet, but the way that things are leading to, I'm surprised it hasn't, because it looks like they're literally heading for bankruptcy. And I would not have a bank savings checkings account with them in the case that that would occur. So yeah, I'll just leave you with a quote because I love quotes, and there's a lot of wisdom in quotes, right? So these are market related quotes. Knowing when to be involved in the market is just as important as knowing what to be in. And then by Mark Twain, history rhymes. So we shall see if history repeats itself or if this is just another time. So thank you for tuning in, guys. I appreciate it. And I'll talk to you guys soon. Have a wonderful weekend. Weekday or week. Have a wonderful week.